This week's big sell-off. The answers straight ahead. Live from the New York Stock Exchange. This is the final and most important hour of the trading day.
Thank you very much. We were wondering whether this was the turnaround the bulls were looking for. I don't know now with the Dow up just 58 points, but it's a start. As you know, this morning, good jobs report. Private employers shrugged off the high oil prices to add jobs at the fastest pace in 5 years. In April, non-farm payrolls rose by 244,000. The unemployment rate did rise, though, 2 basis points to 9% as more people re-entered the market looking for jobs.
The expectation, as we talked about yesterday, was a gain of 185,000. Yes. It comes up 244,000. You would expect a bigger move in the market. The market, however, lost much of its early momentum late in the day, with the gain of about 61 points here. Joining us now to talk more about it is Rich Peterson. He's Director of Valuation and Risk Strategies Business at Standard & Poor's. Wayne Kaufman is with us. He's Chief Market Analyst with John Thomas Financial. Gentlemen, it's nice to have you on the program.
Great to be here.
What's your take on the jobs numbers today, Wayne?
Well, it was nice to see after the recent jobless report yesterday was bad, and some other metrics haven't been so great recently.
But does it tell us anything about what's to come?
I think I will take a positive from it, okay? Not jumping up and down positive, but yeah, it's a positive.
I mean, we are seeing growth, right?
We are seeing growth, seeing improvement,
each month,
continued improvement in the economy.
There. But so why didn't we see a better market response today, do you think?
Well, we started off in a very strong, obviously we had those talk at noontime about the possibility of Greece pulling out of the euro, causing some concern about maybe Europe's disruptions going forward. But I think the numbers we saw today, over 260,000 jobs in the private sector, is a validation of the view to be moderate growth ahead, which augments well for earnings expectations. Earnings are very well, again, according to the Capital IQ numbers. We started earnings season looking at about a 12.2% growth in the first quarter.
Right.
Fast forward about 3.5 weeks later, over 19%. So all sectors are doing better than initially expected.
Well, let's talk about more of the positives, actually, because on the negative side, you've got high oil prices, even though they're down from the highs. You've got 9% unemployment and a housing market that has yet to participate in any economic recovery. But the corporate sector very strong. What do you see on the horizon from your data in terms of IPOs, in terms of M&A action? What are you looking at?
Well, what I found very excited at the start of the week, you saw some former private equity deals being acquired. Case in point, Wilbur Ross's International Co Group, which was acquired back in 2004, IPO'd in 2005, got acquired by Archco for $3.8 billion. That comes on the heels of last month, where Graham Packaging, which was a private equity IPO back in, I think, 2010, got acquired. So all these deals that were acquired back in 07, 06 are now coming public again, now being acquired. Very good. We're seeing more deal activity, especially from the foreign sector. Foreign deals, foreigners buying into the U.S. It's up over 100% in terms of dollar amount where we were a year ago. Teva Pharmaceutical buying Cepharon for about $7 billion.
Yeah, but that'll change if the dollar continues to rise.
That's true. That's true. But
John, I was going to ask you, where do you make money in this market then? Primarily the U.S. market. I mean, what's the strategy to try and increase your profits?
First of all, I think that we're still in a bull market. That's obvious. The market is just unwinding a little bit of over bullishness and over owning of certain sectors. Like there was too much piling into energy, and you saw what happened with silver and gold. But bottom line, earnings are terrific. 2011 earnings around $99 aggregate earnings. 2012 numbers about $111. These numbers point to S&P high 1400s and then high 1600s. So there's a lot of sectors. I particularly like industrials.
Okay.
I like chemicals. I like selected technology stocks.
Okay.
I think the sexiest debate right now, which I'm really interested in what's going to happen with commodities, because you've had this huge run up. The emerging markets play, the commodities play, have been the place to make money. I'm talking 5 years now. So would you put money to work in that area right now? At the end of the year, will oil, silver, gold, et cetera, will they be higher or lower than current levels?
I think the companies in commodities will be higher. For right now, I think that is still being unwound a little bit, and the dollar, which the commodities trade inversely to the dollar, on the weekly charts is something we call a bullish engulfing candle. The last time we had this was December.
A bullish engulfing
candle. It's
okay.
Japanese candlestick charting.
Oh, okay.
But technicians out there all all will recognize is the last time we had this on the weekly chart for the dollar was December '09. The dollar rallied 17%. So we need to see what's going to happen with the dollar. There may be a little more softness in the commodities for a couple of weeks until this all gets evened out. But I think commodities companies, commodities-related companies, are still a great place to be.
So where are you finding value right now?
Let me take one side of that. What Wayne said, we're of the opinion of our group at Valuation Strategies that with QE2 ends at the end of June. We're seeing growth, which would augment the fact that the dollar should recover at being at a 17-month low. So we're of the opinion that there will not be a QE3, that the dollar will start to rally going forward, and that would help equities going forward. And you had $99. We're about $1 ahead as far as 12-month numbers. Let's call it an even 100. That puts a 12-month valuation about 13.5 times earnings. So stocks look relatively cheap.
When you write with a Sharpie, it's close enough. You're both in the same category right there. Good to see you both. Thanks for joining us today.
Have a nice weekend, guys. Thank you.